Welcome back, guys. So officially year is over. S&P 500 basically down 18.11% and Nasdaq is down 30+%. But before we dive into like individuals, names, performance year to date, let's quickly have a look at what I'm looking for the next week, for the beginning of the week for S&P 500 SPY, basically price levels to watch. So today, basically market closed very strong on Friday. We did close flat, but right at the end of the day, buyers came in and we went right back into the resistance area that I'm watching, 383. So above that, we do have a resistance at 50-day moving average. 50-day moving average on my chart is this yellow line right here, which is 389 at the moment. So that's the resistance I'm watching, and so far it looks like, yeah, we can definitely push up there. But if you switch to a daily chart, you can see we are kind of stuck in this range for the past, basically after this OPEX, we pretty much did nothing. Basically, we are at the same price as we closed on that OPEX, monthly OPEX, and we pretty much carried it all the way to this quarterly OPEX. Basically, quarterly was today, December 30th. And a lot of people who had calls and puts, they basically lost money because stock market did nothing. All right. So going forward, well, this is the upside potential. Downside, basically, I'm watching 375 below 370. And first week of the year tends to be very volatile, and volume will come back in. You can see past 2 weeks, we did pretty much trade below volume, average volume. So, but let's have a look at what happened this year and what I'm watching going into next year in terms of like sectors. So let me just take a look at the monthly chart of the SPY. First thing I want to show is that SPY, SPX, ES, mini futures, whatever you're going to look at, you're going to see this picture. Bearish engulfing monthly candlestick pattern. What it is basically bearish pattern where you see the candle itself, like the last candle, is much bigger than the previous candle, which is, I'm looking at the monthly, and you can see that the price has to be above previous. It should go above the previous month's high and also close below low of the previous month's basically low, or previous candle's low. That's what we did basically for December and November and December. So going forward, I will be definitely watching it like a macro big picture bearish. And here's a few things that I just want to go over with you guys. So total return 2022, 18%, give or take, right? 18+%. And I just went all the way back, or basically data could take me 1926. 1926, that's where we have the data for S&P 500, okay? And I basically said, okay, well, what happened anytime we saw like double-digit loss in market? What happened next? 30s, we know we had a rough, basically start, Great Depression, and then World War II hit, you can see. And basically the only year where SPY and also 1957 and 1996 where the stock market was negative 10%, and then the following year it had a pretty big gain. But I did not dive into if what was going on with the monetary policy back then. But the most recent ones, a lot of people compare basically 1970s where market was declining for 2 consecutive years and lost more than like 40%, and also early 2000s. So it's looking a lot like this just by looking at what is going on with the tightening, and we are not in a loose financial conditions for markets. A lot of layoffs are about to start even in 2023. So in that sense, you can just look at, and you cannot, of course, this does not predict the future, but you can just look back and see what happened. If you are someone who is deciding to dive into market next year, let's say, I mean, the point is that you will have an opportunities, okay? You will have plenty of opportunity, plenty of time to accumulate at a lower rates just by looking at this data, because anytime you see a stock market go down double digits for 2 or maybe even 3 consecutive years, the following years produce significantly higher returns. If you just go back into the 1930s, where people say, oh, Great Depression, like 10 years, then World War II started, you can see that like right after what kind of returns was produced in S&P 500. And same thing 2000s, right? And 2000s, like, why a lot of people comparing it to 2000s? Because loose financial conditions for a few years. You can see 1997, 1996, like double-digit returns in S&P 500. But if you go look at the like last 2019, 2020, 2021, you can see same thing, like really, really good returns. But if you go to take a look at the tech sector, which this year closed 33% negative, and then you compare last 3 years, what kind of years these tech names were having, you can see like it's looking a lot like 2000s and 1990. You can see 1995, 1996, 97, 98, 99. Of course, we did not get 100% returns 2 years in a row, but there were stocks that were shooting up, especially in tech, like 2, 3, 4, 5, even like 1,000%ers, a lot of names. And look what happened. So that's what I'm afraid of going into 2023, 24, maybe even, because tech, anytime it closed more than 30% following year, was very, very rough. You can see it just by looking at a few. I mean, we don't have data for since 1986, but of course, you can say, oh, because it was only 1 year, 2 year, and even 2008 when we had a pretty big sell-off, 41% down. Following year, we had 53% up. Sure, it can happen because it's tech names and it all depends what Fed is going to do. But in my opinion, they're not going to lose conditions unless something crazy happens, which it can. There is a probability that they can definitely, if the whole situation with the money markets, a lot of people were pretty much at the end of the year, especially at the end of December, were pretty much alarming that the conditions are going really, really crazy. It's cracking a lot of things, and if something breaks by summer and they start pretty much softening their tone, we can definitely see a rally and maybe even positive year, because a lot of tech names are beaten down. And I want to show you the heat map. I can show you the individual returns of S&P 500 as well as a list, but heat map is a lot better. But you can see how where the money is hiding right now and where it did head in 2022. These are the sectors, very defensive sectors: energy, healthcare, consumer defensive names, dividend paying stocks, and defensive. I call these war stocks, right? LMT, Boeing, NOC, like these. That's where the money is. And some farming names that phenomenal this year held up the Dow significantly higher, but you can see where the weakness is. And of course, these names can produce double-digit gains after being down so much following year, but we'll see what's going to happen. But you can see where the money is hiding and where they were throughout 2022. Okay, and if you're someone who likes to buy those kind of stocks, beaten down stocks, I mean, you can just go take a look at the list and make it maybe even watch list to take a look what names are beaten down, and like just watch them throughout the 2023 and see if if they show any sign of life, any sign of flow from smart money or from big funds, because you can see like worst names are like Match Group, General Holdings, Align, Tesla 65%, Meta 64%, PayPal 62%, cruise lines, and there's so many like chip makers, travel names, all these names, Amazon, Nvidia 50%. Like these names are beaten down really hard. And if you look at the best performing names, these are the energy names. Okay, so, and we'll see what happens with the energy. Oil basically closed at its 2000 at the big, wherever it started the year, that's where it closed. This is the crude oil monthly chart. You can see we started the January somewhere at $75, and it's before invasion from China, from India. I mean, from Russia, Ukraine. My bad. $75 in the beginning of the year. That's where it started, and well before the invasion, it's $88. So we did basically close right at the beginning of the year, and we'll see if oil basically at the moment for the past 6 months in a downtrend, but year to date flat, slightly positive. If it does start breaking out, it's going to put a lot of pressure in a lot of those names that we looked at. So, but going back to SPY, so I do think that we can definitely take out these lows. We still have Q4, like biggest maybe pivotal point going into 2023 would be maybe Q4 earnings, strongest year for pretty much many companies, and that will pretty much set the tone for the rest of the year, in my opinion, because in the past months or so, I was looking at the individual sectors, and financials were basically standing out a little bit because they are holding up a little bit better. And year to date, I mean, let's just measure how much it's down compared to Sp500. Yeah, it did outperform anything. You can just look at the list of stocks that are down year to date, and if you compare it with market, it's definitely outperforming the market. Even though it's down 12%, overall market Sp500 is down 18%. And if you look at the Nasdaq, I mean, it's even more. It's 33% down. So I would watch financials because they are the first to report every quarter earnings, and we'll go from there. But I don't want to make the video too long. I will dive into individual stocks this weekend and just go through many individual names, but that's the update going into January. First week, I'm expecting big volatility, and it doesn't mean that we can go down. It means we can just go back up as well. But the resistance, I mean, we don't have to go super parabolic, because you can see the supply zone right now is pretty hard level to get above, would be 390, and for that we need to have some sort of a event from the Fed, or again earnings, all that can help to get S&P 500 over this resistance, or go back to downtrend and start making new lows, because bonds, they didn't even blink. Yields were at highs. I just follow TLT and TNX. You can see like in the past, where when we were chopping around for the past 14, 15 days or so, or maybe even less, 10 days it looks like, yields went up significantly while market just chopped around. So market could be just in a waiting mode. Basically, it needs more data. It needs to look, to pick a direction, it needs to have like significant information, which is earning coming up, and we have Fed basically in a couple weeks. So that's the video. Thanks for watching. I don't want to make it too long, but I'm gonna dive into individual stock names, technicals this weekend. Hope you guys check it out. Also, take a look at the Discord in the description. It's completely free. We talk about the daily option activity and stocks in that group. So thanks for watching. Happy New Year. Wish you all the best in 2023. Take care. Peace.